The Mining Indaba was launched 25 years ago in Cape Town. It was attended by just under 400 delegates and one South African parliamentary representative. Now, the Investing in African Mining Indaba 2019 is the world's largest mining investment conference. It attracted 900 mining executives from over 350 junior, mid-tier and major mining companies, 35 government ministers and 2 presidents. This year, for the first time, a South African president spoke at the Indaba. Queues lined up well over an hour before President Cyril Ramaphosa addressed the gathering, and many passed through security checks long after standing room only was announced.
Given the significant role that the mining industry has played in the construction of present-day South Africa, it is for us a truly great occasion. It is also doubly so because as the Mining Indaba, you are also celebrating 25 years of holding this Indaba. So our histories, our stories, and our paths do coincide. This Indaba offers us a valuable opportunity to do a number of things, but more importantly, to engage with investors from across the globe, seeking opportunities for new and further investments in the mining industry on our continent. It is important for us that the investors that many of you represent are here, and you aim not only just to bring your money, but you obviously are here to create value for your shareholders, for yourself, by increasing the value of your investments, and in this way you also become our partners on a journey of inclusive development. We are pleased to note that a full day has been dedicated to deal with the issues pertaining to our beloved continent's sustainable economic development. This demonstrates the mining industry's determination to become an integral part of the social forces that are working to address all the social, economic, and environmental challenges related to mining activities on the continent. We, as Team South Africa, have just come back from Davos. And we've also just come back from a state visit in India, where we engaged the investment community of the world on, amongst other things, South Africa's ambitious program to mobilize for investment in a big way. But we also took time to talk about our own continent. We took time to address some of the challenges that some of the countries on our continent, not only ours, are facing. And our message to international investors was just simple and straightforward. All of us, as African countries, and indeed as South Africa as well, we are taking practical measures to build economies that are underpinned by inclusive growth, competitiveness, as well as transformation. This message, right across the walls of the World Economic Forum, found practical expression in the minds of a number of people as they listened very carefully and paid heed and attention.
There is no question that African countries have not always done well in negotiations with the companies that have mined our minerals. We've been handicapped in the negotiation process with the big mining companies because of political instability, bad reputation, and sometimes incompetent and/or corrupt representatives who negotiate on our behalf. The world has changed a lot since the early mining contracts were drawn. Today, we are a more politically stable continent, and more committed to the rule of law. And thus mining companies cannot and should not stick to the perception of the high-risk, politically unstable place to do business label. Some labor practices that were tolerated 100, even 20 years ago, cannot and should not be tolerated today. The distinguished Venerable Festus Mogae, former President of the Republic of Botswana, speaking at a meeting of the Africa Development Bank 10 years ago in December 2008, noted that previously African countries had to entice investors by granting incentives such as extensive tax and royalty exemptions. Consequently, many countries earn little from such contracts. Ladies and gentlemen, I believe we have come of age, and we should not have to give unusual tax and royalty incentives, and mining companies should not expect to make extraordinary profits on our continent. We are realistic enough to know that companies that come to do business must make their profit. But we want to work with them under the normal conditions that pertain in other parts of the world. It bears repeating here what I have said elsewhere. Africa needs her own set of smart, tough lawyers, accountants, and engineers to negotiate the business deal in a transparent and honest manner. We must strike deals that are fair to both sides and can reassure the long-suffering African people that they are no longer being unfairly treated. Reviewing mining contracts is important for more than earning greater revenue. Governments must also respond to pressures from civil society groups and communities to ensure that contracts and mining codes address environmental protection, adequate compensation to affected communities, and the rehabilitation of land after mining operations have ceased. Minerals are a public resource, and the negotiations between companies and countries should be transparent, accessible, and easily understandable by citizens. And that means we should do it all in language that does not need to be interpreted by experts. Communities should be able to examine mining contracts, finding out how much revenue has been generated and how and on what it is being spent. Long and bitter experience means both sides, African governments and mining companies, have to work hard to gain the trust of the people.
While the Indaba was taking place in Cape Town, the new taxes introduced by Zambia made news headlines.
First and foremost, I would like to say that no one goes out to pay taxes while smiling. Even at an individual level, when taxes come, everyone raises eyebrows, and that's what is happening to the mining industry. Most of the mining industry, in principle, support our tax regime, and they have concerns. And we are talking to them, we are engaging them so that we can be able to see in which areas they have concerns. And we talk and discuss on how best to move forward. So yes, there has been this hype, but we are talking to our partners. You'll be interested to know that, in fact, the anchor of the mining tax regime, the sliding scale, is actually a proposition of the mining industry itself. What we have done as government is just to do some housekeeping to the sliding scale, and also to improve in areas where we feel that we needed to see some contribution. We saw that there are many mining operations that have been around for 15, 20 years, and they've not been declaring any profit. And most of them have been hedging their losses against government. And so we are just trying to cure certain things that will allow the industry to grow. We are principally a mining economy, and in our quest to take our mining forward, obviously, we cannot put a regime that can kill the industry, because this is where our bread and butter is.
Minister, are you not worried about the potential backlash that can result as a result of this new regime? I'm hearing numbers being thrown around of job losses to the tune of 21,000 in the mining sector. Does this not concern you?
Yes, extremely. It concerns us, but there are procedures. The mining industry operates with the Ministry of Mines as a client and regulator. And when we give them the licenses, they have conditions of grant. And certainly some of the conditions of grant gives an impotence in terms of their commitments to, first of all, human capital, technical input, and so all these values should marry. And I'm glad to inform you that the key mining houses that had announced that they're going to retrench our workers have since rescinded their decision, a sign of good cooperation, and would like to applaud them.
Right. Who were they again?
First Quantum, Mopane Copper Mine, Konkola Copper Mine, Lubambe Copper Mine.
Right.
We have had very positive interaction with all these mining houses in terms of engagement with the Minister of Finance. And I must say that the engagement have actually been escalated at the level of His Excellency the President in terms of support, and we are very grateful.
Mining is as good as the performance of the individual mines. If the mines are not operational, are not making money, many of the things we dream about will not happen. It is profitable mines that make benefits accrue to the various stakeholders, right from the shareholder to the community and to the workers. In the past 2 years, there has been signs of recovery in demand, resulting in an upswing in some of the commodities. Particularly the prices of a number of these commodities. The future, however, remains uncertain, with the World Bank predicting global growth rate to slow this year to 2.9%. And furthermore, emerging market currencies, such as the rand, are also expected to experience quite a testing year and a lot of volatility as a currency. As South Africa, we remain optimistic given the performance of the economy, considering that we managed to come out of a technical recession in the last quarter of 2018 with a 2.2% growth, which was quite a good signal. We're hoping that we can build on that and grow faster. This was mainly due to higher contribution to growth by several industries, most notable agriculture, manufacturing, transport, finance and business services. I'm making this point to indicate that in taking the country out of the recession, the contribution of the mining industry was not a positive one, which requires us to invest more in mining, contribute more. The contribution of the South African mining to the GDP is around 7%, but its contribution to the earning of foreign earnings is about 40%, which makes it quite a significant sector in the industry. Our hope is that we can grow the contribution to the GDP up to 10% in the next 3 to 5 years, and in the process, earn more foreign earnings for South Africa.
Well, of course, it is our duty as government as a whole, but to try to get more value into this economy wherever we can. And one of the areas where we get more value is when we add to the resources that we have in our natural endowment, we add value to them in manufacturing processes. And we've been supporting a number of initiatives that are already around. There are companies that are manufacturing fuel cell equipment. There are companies that are in the platinum group metals that are making catalytic converters. There's an iron and steel industry that we are deeply engaged with as a department. But I think that really we haven't got to the level on beneficiation that we need to. And it's just An engagement I had with a company this morning, they were telling me that you get about $100 a ton of mineral sands. If you actually process that ton and you get titanium out at the end, you get over $1,000 for that titanium. And the fact of the matter is that as the fourth industrial revolution unfolds and as everything linked to that unfolds, so the value of the mineral product in the final material, and it's the same for agricultural raw materials actually as well, is a diminishing proportion. And so really the future of the continent and the country lies in moving up the value chain into more complex activities. So we've been working to support that, obviously working with our colleagues in DMR. And also I mentioned in the input I gave here that this is the common ambition of the African continent. Adding more value to the mineral endowment of the continent is one of the big ambitions of the African continent as it seeks to industrialize. Indeed, it means that we've got to look very closely at, a whole lot of things. How do we develop the technologies, the technological capabilities? How do we ensure that there's a competitive environment for value-added activities? And then, of course, the big issue is how do we make sure that the pricing policies are such that we do have a price advantage in the supply of the raw materials in our own domain that support beneficiation activities. This is all work that's in one shape or form under a work in progress.
In terms of your role in ensuring that the Zambian economy grows, which is vital if it's looking to get investments in any area, give us a sense of where you are prioritizing spending your budget. Where is the bulk of it going to and why?
One of the key areas is the mining sector, and we believe that having put in place now a regime that will give us more out of this resource, which is really a wasting asset down the road. We believe we should get more from the mining sector. So we have increased our mineral royalty tax, and we have tweaked the mining regime in such a way that we can see mining companies being more profitable, because some of them have been there for 15, 17 years. We haven't seen any dividend from them. I think we've got 2 companies that are paying dividends now, which is great. So we're trying to encourage those mining companies that are paying dividend to pay more dividend. We're trying to get those that are not paying dividend to become more profitable so we can receive a dividend from them. So we've tweaked the mining structure in such a way that it can allow us to get more money out of that sector. If you look at precious metals and gold, there was no export duty at all. So we have said we need to impose some level of export duty, which is 15% on the likes of gold and precious metals. We're encouraging the mining companies as well to try and add more value. Value addition is a special focus for us going into the future. So those that are importing, for example, concentrate, we're saying let's impose a tax on that and let's allow these companies to produce the concentrate that is required in the copper. So for us, mining is a key area, and allowing the resource to be opened up, meaning new mining companies to come in to broaden that tax base, absolutely critical.
Ethiopia has now engaged in reforming every sector and the system, the policy, and all those strategic issues. The mining sector is actually one of the sectors we have not been prioritizing for the last 2-3 decades, but now we are now considering mining as one of the key sectors actually to influence all other development sectors. So we are now reforming our whole institutional setup in order to include this mining sector as one of the catalysts for socio-economic development and infrastructure.
And what exactly are those plans, and perhaps more specifically the targets that you're trying to reach for your mining sector?
Actually, we are now focusing on transforming our mining industry, mining sector to transform our industrialization process. Because if you have information on global industrial revolution, many nations link their mining business with industrialization were very much successful. So Ethiopia has learned a lot from those countries, and now we are focusing on linking our mining to value addition. And also, as you know, Ethiopian people are almost young, like other African countries. So we have to create a large amount of job for those youth and women. And we are also focusing to generate foreign direct investment because, foreign income. Because currency and foreign exchange is a very important issue for developing nations to pay for import. So we are focusing on industrial minerals. We are also focusing on those precious minerals. We have a lot of resource abundance, like gold and those precious metals. So we are also, as I mentioned, in order to earn some income from foreign exchange, we have to sell those precious metals directly to the world market. We are also focusing on this sector. So the other is, as you know, we are under huge investment on infrastructure. So our construction sector is seeking some input from our mineral sector. So we are also focusing on that. Yeah, we understand our context. We know very well, and it's emerging economy. We have to compete with all global capital markets. So to attract these mining industries, we provide them some incentives. Government gives them some duty-free infrastructure, and we also give them some, when they engage into operation or exploration, we also give them full recovery of costs. So these are also one of the key issues attracting those mining industries to engage into Ethiopia. And we also provide them with high quality data. We are almost renovating our data set. We are adding some value and preparing data for industries, so it will reduce the transaction costs and they will be competent. We are also upgrading some of those infrastructure issues like ports, so they will not be incurring too much costs when they sell their products, mineral products, in the world market.
This time last year we still had the previous minister in place. The industry was I think we had 4 different court cases in place. We weren't talking to government. We had made it very clear that we had lost confidence in the ability of that minister to run the department. So government and industry were not talking. But I think with the appointment of His Excellency President Ramaphosa, the appointment later in February 2018 of Minister Mantashe, who's widely respected in the industry as a tough negotiator as well as a leader of the industry, we're in a very different space. Not to say that we don't have challenges, but we are definitely in a much better environment, significant engagement taking place, and that engagement is productive engagement. It's not just about meeting, it's about identifying problems, identifying solutions, and then looking at how we can implement the solutions.
And what's main or top of the agenda at those talking sessions, particularly regarding challenges, and what has currently been said about how to move forward?
So we've had 7 commodity meetings with the Minister, 7 CEO-led commodity leadership forum meetings under the Minerals Council with the Minister. Those meetings have all been very focused on the specific commodities, platinum, gold, diamonds, coal, etc. And each one has got its own specific nuances. But if I was to prioritize maybe 4 or 5 of the key issues, first one is safety and health. We have a very strong focus as our number 1 priority, improving the safety performance of the industry in 2019 and continuing into 2020, 2021 and forward, and continuing our efforts on the health side where we've made significant progress. That's number 1. Number 2 is creating a regulatory, a legislative and an operating environment that works for all of us. And that's got to be competitive, it's got to be predictable, it's got to be stable. And the Minister has withdrawn the MPRD amendment bill, a charter which is a much better improvement on the first version, has been gazetted, etc. So on the policy and regulatory side, we're making progress. The third one is around infrastructure. Our biggest challenge is around Eskom, because 15% price increases, in addition to the 4.4% regulatory clearing account that they've got already, would imply a 19.4% increase per year, which is a 70% increase by 2021, which we just cannot absorb as the industry. So I think the discussions on what to do with Eskom and how to resolve the issues, because those sort of pricing increases are not possible. But we need reliable, cost-effective power and rail. So it's not any discussions on Eskom, it's discussions on Transnet, etc. The fourth one is obviously related to innovation, technology development and improvements, and I think we are very much adopting mining 4.0 in a just transition process. We've got the Mandela Mining Precinct that we're working in partnership, co-funding model between government and industry. So we think that's got some exciting challenges. And then fifth and not least is we have a real focus on improving our engagements with communities. And we've seen some quite significant progress made. We've got 2 pilot projects in the Northern Cape and in Mpumalanga as the Minerals Council, engaging companies, getting companies to engage, and then obviously seeing how we can much better improve our impacts on community development.
Stay tuned for part 2 of this highlight special on the 25th Investing in African Mining Indaba, in which we hear from CEOs and industry leaders. One of the many networking events held around the Mining Indaba was hosted by Brand South Africa. Guests were given insights into investment opportunities in the country.
From your interactions with foreign players, have the changes that have happened so far, will they be enough to position South Africa's mining sector in a more positive light, particularly for foreign currency owners?
I don't think it's about being easy. I don't think the quantum and the nature of business that we are talking about can ever be easy. Even if you had investors flocking and the money is there and there's pots and pots of gold. However, the implementation will never be easy. But what it does do is that it gives the hope. It gives the hope because with mining commitment and mining investment, there's so much that flows from it. There's infrastructure development, there's job creation, and with the mining industry now, it's about the mines of the future, and that you are talking about different skilled people. You are creating jobs for young people who will bring in technical skills, engineers, and operating machinery and all those things. So the simple answer is it shouldn't be easy, because it's tough work, it's hard work, but it's hard work that will have results, that will bear fruit, and that the impact will then be felt for many, many more years to come. Easy come, easy go. But here you will put in a lot of energy, a lot of work, a lot of investment, but it will be with us for the next 40, 50 years. And that's what we are looking for. We're also looking for sustainability. We're looking for communities that are sustainable, where you will say, yesterday it was a bare piece of ground, but 20 years down the line. So it also gives hope for young children today that in 20 years they will have a future.
Look, we have a year in a lot of developments happened. I think since the inauguration of President Ramaphosa, the government has been showing itself to take interventions, into areas like the mining charter, for example. Very clear instruction to Minister Mantashe. We have to unblock this thing. We cannot have a situation where industry does not talk to government. So I think both industry and government is saying, look, we're not where we need to be. However, we like what we have. We like the direction that we're moving in. And I think one very concrete example of that, of progress, exploration for minerals in South Africa has tapered off a lot over the last few years. Now, with the revised mining charter, it has really sparked renewed international interest in coming and exploring in South Africa for new mineral deposits. So I think that's one very concrete positive movement that we see in this last year around mining. And I think also South Africa is typically associated internationally with mining, with minerals, etc. So from a brand reputation point of view, we really struggled for a few years because of this conflict between government and business when it comes to mining policy and so forth. So I think we have taken some serious strides in this last year.
We have invested a lot of time and energy in changing the relation in the sector first, and therefore together send out a message that says we are ready to receive investors from anywhere, we are ready to do business with you anywhere. And that message is beginning to sink in, because sometimes we become narrowly obsessed with what is in front of us. If I'm disagreeing with the council's Mineral Council, I think that that is the end of the world. And forget that there is a country, there's an industry behind the individuals who are involved.
Is it a new dawn?
Yeah, absolutely. A couple of things, if I just reflect on this time, last year this time, we didn't have a new minister. So we have a new minister, we have a new head of state. And I think those are actually creating some of the upbeat kind of atmosphere we are feeling. But additionally, I think the new minister has come in and has adopted a very collaborative approach with the industry. And that is why we now have a charter that we have maybe 2 or 3 things to talk to the minister about as opposed to the whole charter a year ago.
And then Vedanta was one of the companies that made commitments at the recent SA Investment Summit. Bullish on South Africa, I suppose, or maybe cautiously optimistic. Remind us again why it is that you committed such monies to the South African economy.
Okay, so Fifi, I think the difference between us and all the other mining companies is that we've been bullish and committed to South Africa through the last 4 or 5 years. Okay, so firstly, we believe we are bullish because it's in the ground. So that's the tick number 1. But if I look at the project that we've just now executed, $400 million of the first phase, the Northern Cape specifically was a very inviting geography in which, we got the approvals done in time and which we then, executed. So I think we are bullish because we see the zinc potential and we have been greeted by a very inviting government.
We're talking about the state of South Africa's mining nation. What does that look like?
We are cautiously optimistic. We've seen now, we think that we grew a little bit faster than the economy. Now that's probably because the economy didn't grow that fast, but at least there has been some growth and there has been some employment improvement amongst the non-gold and non-platinum commodities. The other indicator that is quite important and seen worldwide as a leading indicator is that fixed investment has started to improve. There's been some noise in the data, some adjustment in the historical information, but it does seem as if there is some improvement, and meaning that the companies are saying, well, we need to do something and get going further. Of course, we are so dependent on what happens with commodity prices and the exchange rate. But the world economy is growing. Commodity prices have turned, if you look at it in dollar terms, a little bit better than in rand terms, but that's simply because of our idiosyncratic exchange rate. But it seems as if there is solid demand building for a different group of commodities. That's the other very important structural shift that seems to be taking place towards the green economy type of commodities, like zinc, like copper, like stainless steel, manganese, and cobalt, and that sort of thing.
Talking to the man, or one of the few men who are actually making a profit in the platinum mining industry. I mean, I did see your trading update. You guys make it look so easy. I know that there's not a lot that you can say because you are in a closed period, but what can you tell us about the state of mining in the platinum industry in South Africa specifically right now?
So the platinum industry has come out of some very, very tough years. So in the last 5 or 6 years, we've been describing this as an industry in crisis. So a lot of hard work has had to go into turning around the businesses. In some cases meant putting mines on care and maintenance. We've had to sell some mines. But I think overall, certainly for Anglo Platinum, we've been able to demonstrate that our strategy over the last 5 or 6 years has been paying off, such that we could, in 2018, we could start returning cash to shareholders. So we started reintroducing the dividend, and we paid over 1.9 billion rand to shareholders again. So I think you correctly described that it's a much better position than we were, say, 5 years ago. The whole of the industry seems to be turning around as well, and we saw Impala put out some really good numbers as well. And I think the reporting season for the platinum producers will be much better. I think what we're trying to do today is to demonstrate how we as both the platinum producers and the Minerals Council have been working on a national platinum strategy. It was crafted in the days when the industry was in crisis. But the way we think about this industry is just how much better it could be if we all work together.
What is driving this turnaround in the industry, whereby now we could possibly see a statistic where less than 70% of the industry are actually loss-making?
So it certainly is because the market fundamentals themselves are in much better shape. We've actually been talking to this for the last number of years, telling people to have faith in the platinum group metals. Because of the diverse demand and the wonderful nature of these metals, they are used extensively across the world. Platinum in both jewelry, the auto catalyst business, and industrial uses. And although the whole world seems to think that, platinum's dead because of the Western Europe auto story that's under a lot of pressure, there's, jewelry's been flat over the last couple of years, but industrial's been growing very strong. And light-duty diesel outside of Western Europe and heavy-duty diesel has been growing. So actually, if you think about platinum, the metal that's been under the most pressure, there's actually fairly good fundamentals. But then on the really positive side, you've seen palladium and you've seen rhodium really, really strong. And some of the minor platinum metals that most people don't even know about, ruthenium, iridium, have also been running quite nicely. So a lot of it has got to do with the fundamentals of the commodities are actually in really good shape. And then on top of that, the mining companies themselves have been really, really focused on turning their businesses around. And I think it's a combination of both price that's coming from good fundamentals and good work that's been done by the mining companies.
Neil, talking about the mining Indaba, I mean, you're here with your colleagues in the sector. Any discussions about M&A activity, any discussions about investments, and particularly in gold? We have seen recent big deals there. I mean, in Newmont and Gold Corp, we've seen Rand Gold and Barrick Gold. Are we seeing a future tie-up regarding Sibanye potentially?
Look, we like the gold sector. We've grown enormously in the PGM sector, not because we're unhappy in gold. However, I must tell you that when it becomes a fashion to do M&A because everybody else is doing it, it's probably not the right time to do it. So we'll be very circumspect. We would like to grow our gold business. We'll look for opportunities once we've restored our balance sheet health. That's a primary focus for this year. And we'll look forward to probably growing in our gold business in the next 18 months. I think gold will still have a very significant role to play. There is no other real store of value other than gold. So gold, in terms of uncertain times and so on, will be the safe haven that everybody goes back to.
Now, the future of mining also looks at how the boardroom is put together. We have heard from the President, Cyril Ramaphosa, in fact, a number of players about how we need room for labor at the boardroom table. Talk to me about that, and as you see it, specifically as you are facing, one of the longest strikes that we have had in recent South African history.
Yeah, I think it would be actually very constructive to have unions understanding the imperatives of business and sustainability. So I certainly would welcome that opportunity to have a union in a boardroom. In terms of the Companies Act, though, there's fiduciary duties. We all have fiduciary duties to look after the company, and it would be interesting to see unions accepting those roles, but I think it could be very constructive.
Issues affecting the mining industry in South Africa include that of labour. A number of labour protests have been violent, raising concerns among investors.
South Africa is competing with other African countries here for those dollars, and certainly this is not something that is attractive for our mining industry. Just your response from a governmental point of view as to amending labour relations. I mean, and I speak specifically at this 3-month strike that we are seeing at Sibanye's operations, with AMCU leading that.
The reality of the matter is that you never replace collective bargaining with anything, because if you do that, you will never resolve any problem. Any problem in the workplace will require government intervention. My own view is that the leadership of a union, the leadership of a company, must talk to one another. When the strike becomes 2 months, 3 months, you must know that it's a reflection of weak leadership on both.
Mining for the future, the level of inclusion, and particularly communities and even labour. We heard the President speaking about perhaps inviting labour onto boards. How has that message been received by some of the mining companies that you've invited here, that you do business with here?
It's been interestingly received. I think the rooms for those sessions have been packed. I think we had some of the world's largest mining houses talking about how they see the workforce evolving. But actually, it doesn't mean swapping one load out and bringing the next load in. It might mean the people that actually understand mining and actually understand how to go deep or whatever it is, changing their skills rather than bringing someone totally new in.
I'm speaking to a lot of mining bosses. Everyone is talking about a new dawn in this mining sector, especially when you look at where we were this time last year. What's your feelings about the turnaround in South Africa's mining sector?
I think everybody's taking a lot of comfort from the fact that there's engagement and constructive engagement. I don't think there's agreement on everything, and I don't think that there's 100% ideological alignment on everything. But then again, we represent capital, and admittedly we do take a balanced perspective to the operations. But government is in a difficult situation because I think that they have a much wider constituency into whose expectations they have to deliver. So ideologically, I don't think we're 100% aligned, and there are a number of issues that need to be sorted out. But I think what everybody is finding very encouraging is the fact that there's been very constructive engagement now for the last 12 months or so. If you compared this to 2 years ago, roll back 24 months, I think the mood was very bad, and it's improved 200% since then.
For DRD Gold, what is the most pressing one that you would like to be fleshed out right now to make your way of doing business a lot easier?
The Minerals Council is representing the industry on issues involving the charter, on continuing consequences and renewals, etc., etc. And I think that is an engagement that's being done properly and responsibly. From a personal perspective, our single biggest challenge now is the reliability of power supply. We're a high volume business. We don't have any spare capacity. We need to produce every day for 24 hours. And if there's an interruption in power, it goes straight to the bottom line. So our single biggest risk now is Eskom. And it's as much a reflection of how serious the Eskom situation is, but it's also a reflection of how much everything else has improved. So I don't carry in my heart uncertainty with regards regulatory issues and political issues and so forth. I think we've passed that. I think the political governance in our country is in a healthy state. So those are issues that are being dealt with and dealt with responsibly, but it's the institutional damage that's been done to crucial role players in our economy like Eskom that's going to take a while to fix. The President just said that it's a focus area, and I'm glad to hear that it is. It's going to require a lot of focus, though.
We're very bullish on gold specifically because they've always kept their own, when it comes to prices. We've seen commodity prices on the iron ore side also going up, palladium going up, copper, keeping its own as well. How they're going to manage, efficiencies going forward really has got to do, with the input cost. The labor negotiations, that's always, a big issue in the country every 3 years that we'll have to deal with, as well as the electricity costs. So with the electricity cost, obviously there's a risk now with Eskom working on their turnaround plans. We need a positive outcome in that because of the margins, the marginal mines that's currently out there in some of the industries. We need to make sure, that everything that's put forward on a table from a labor or a wage point of view, as well from an Eskom point of view, that it's actually helped to sustain the mining industry for South Africa. Actually Africa as well, because all of the same issues we have, the rest of the African countries do have.
The stark reality is if Eskom goes, the South African economy goes. That's the simple reality. There is no plan B. You can put up backup generators and so forth to keep your business going during periods of interruption, but if we don't have an Eskom-sized utility that delivers into the power requirements of our economy, then that's South African economy gone. And my big concern is that Eskom seems to think that they can solve their problems, their revenue issues, by upping the price. They're going to solve their problems by perhaps freezing the price or dropping the price and selling more units because they're running out of paying customers. The mining industry represents, I think, something like 30% of consumption in South Africa. And these guys pay on time every month, not like many other consumers who are not in a position to pay. The municipalities are in a shambles. They're not paying at all. So if Eskom is going to start pushing up their rates and the mines are going to start using less and less and less power because they have to restructure, the paying customer base is eroding and it will disappear, and it will take Eskom with it. And as I say, at the risk of repeating myself, that's the economy gone.
The tariff that could be charged is informed by the recapitalization that we can get from government. So it is up to them then to open discussions with the government so that we can come up with a solution. What we are not saying, we are not saying 15% tariffs should be treated in isolation of assuming that the shareholder is able to recapitalize. Because the shareholder, if the shareholder's role can improve, then the tariff could decrease. So there needs to be an open discussion to find the best solution out of this. It's not that as Eskom we don't see the repercussions of this and the challenges that we are facing. But unfortunately we are in a dire situation where maybe we have to cut the limb to save the body. Unfortunately, that's just part of life. We have looked at a number of scenarios. These are things that can happen. On the tariff, if the recapitalization of the government improves, then it can come down. But with Eskom, we have put the 32 billion over and above the savings that we've already spoken about.
It also leaves you in a situation right now where your balance sheet is being crippled by debt. I think you quoted a figure as it's 440 billion rand right now. I mean, every other week we read headlines about Eskom getting some form of loan or some form of help, but that's for the short term. I mean, are we essentially not kicking the debt problem down further down the curve?
No, we are not. But remember, South Africans need electricity, and we still have operational and maintenance issues to do, and we have contracts to pay. And unfortunately, we have to continue to borrow. And now we are borrowing through the help of the government, through the letter of comfort and the guarantee. But we cannot be able to solve our problems through borrowing. At some stage, we will have to agree on what we spoke about today, the combination of all these things.
Are you confident that South Africa will avert a ratings downgrade by Moody's?
I think we have put what we thought is a solution. And the discussions with the Department of Public Enterprise and National Treasury seems to be aligning in one way or the other. But we have also had discussions with the task team. And we are not different from each other, So I think this alignment will help us to come up with a solution. And if we can have that solution, I think the challenges that we're currently facing are something of the past.
From a mining point of view, any increase in electricity price will be disastrous. I can tell you that a lot of our chrome and our manganese gets taken out and processed in Malaysia because of the electricity price. From where I'm seated is that electricity can be used differently than just being a generator of profits. It must be an input to create an economy that is pumping. At this point in time, until we sort out the Eskom problem, I think we're on a weak footing.
What is Transnet's role and purpose here at this Indaba?
Because of the number of customers that we work with within the mining industry, and because of the central role that Transnet plays, especially in the transportation of minerals from the mine to the port, it's quite important that we show our visibility and our support to the mining Indaba.
And can you just give us an idea of some of the conversations that you're having with mining companies? What are their concerns, and how is Transnet addressing this?
I think their concerns is on our ability to deliver on our promises. If you take a 10-year view of the major minerals, iron ore, you look at coal, and you look at just other general minerals such as chrome, over the years, except for iron ore, we've sort of like just been stable, not increasing. So going forward, the industry wants the assurance that we will have the necessary capacity to deliver on their requirements.
And do they have that assurance?
Yeah, we can give them the assurance. We are working on programs to ensure that the rail infrastructure, that is the network, the fleet that will be required, all of that are ready and in place.
Is the Africa Mining Indaba, and Transnet has got quite a lot of things going on in the rest of the continent. I mean, can you just provide us an update with how some of your projects are going?
The Swazi Rail for now is just waiting for the funding. So that's what we'll be working on next. In Botswana, we'll be meeting with them tomorrow, just basically to say that, look, we are ready whenever they are ready to ensure that we link up the coal deposits in Botswana with the railway network in South Africa, especially around the Lephalale region.
As a state-owned enterprise, a lot of attention has been shone on the likes of Transnet as well as the other SOEs. You talked about needing funding for certain projects, for future projects and the like. But can investors trust that their money is safe at Transnet?
Yeah, I can assure the investors that their money is safe. One of the things that we will be doing is outlining a program in which Transnet would be working with the private sector, in other cases to densify the rail network, in other instances to provide capacity where we can't deliver on that capacity.
It's been a wonderful event. We believe it has been a success. We also believe it's a very good opportunity for the private sector to meet up with our leaders in government, but also the captains of industry, the big multinational companies, to have a meeting of minds on what we need to do to move Africa forward. And I found that discussions on sustainable mining, particularly very important on the Sustainable Mining Day, because there was a real meeting of minds in the understanding that it just can't be about mining anymore. We must care about the communities, inclusion, sustainability of environment, especially for the communities around the mining areas. So it's a very important event, and we are very happy that it was successful.
Very interesting. We've had several engagements, in fact numerous engagements, mainly talking with mining companies that have set up in Zambia. You know that they're mainly on the Copper Belt and in Northwestern Province, so when you have this opportunity, it's a good time to engage with them in a deeper fashion, because you're free from everything. We also engaged a lot with potential investors in the mining sector. Cobalt is very interesting now. Quite a few mining companies that are interested come and mine cobalt. We've also met quite a few financial institutions, some that are already lending to Zambia, some are in the process of lending, and some would like to lend to Zambia. So the long and short of our visitations has been to ensure that we maintain the relationships that we have already and try and create new ones as well. Share with them the opportunity that is there in Zambia, and it is vast, because as you know, we have many resources in the mining sector, and it's a great position to be in when you are sitting pretty with such opportunity. So we take this chance to actually try and lure some investors into Zambia.
You are obviously here to spread the message that South Africa's mining industry is open for business. So far, how has that message been received?
My own view is that the reception is quite warm, but we need to pursue it, because investors are unique people, in the sense that your promise is not taken for granted. You must action what you are saying. So it will take time. There will be a time lag between today and the time when we can say, as a result of that mining Indaba, we have seen an increase in investments. We're hoping to see that lead time is quite important to us.
Growing South Africa's mining industry is something that will require all stakeholders to be on board. Businesses communicated its list of demands. What is government's wish list for business to play a bigger role in this challenge?
No, this morning we signed a compact. That agreement between ourselves and the industry and the workers talked to a number of issues that we should address together. So it's not a question of having a list of demands and another list of demands. It should be working together, cooperation amongst ourselves to win and be a better sector of the economy.